So the whole loan to cost and making it confusing, I don't get it. I mean, I get it, I can understand it, but it makes it just confusing in my opinion. And what I just do is 70% of ARV. And if you, let's just break down easy numbers, and it's not gonna make sense when after it's all said and done for profit, but for easy simplicity. If it's worth 100 grand, 70% is 70,000, right? So I'll give somebody 70,000, and let's say the borrower's buying it for 50 grand. Okay, well then I can give them 50 for acquisition and 20,000 for rehab. So they're 100% financed. I can give somebody 100% financing. So the whole loan to cost thing doesn't matter to me, and that's actually another reason to do business with us, is because we'll do 100% financing. Now, we will always ask for some kind of temporary money up. So in that exact scenario, I might go, hey, I'll give you 70,000, but I want you to throw up 7,000 temporarily in escrow, but I'm gonna release 3,500 halfway through your rehab and 3,500 after you're done with your rehab, when the sign's in the yard and it's all granite and pretty and nice. So that way, if it takes you 3 weeks to rehab, you're 100% financed in 3 weeks. It takes you 2 weeks, it's 2 weeks. So it's just a temporary hold, where a lot of other lenders will make you actually put down a hard 10 or hard 20 or 15 or whatever. But we'll actually, you can have no money in the deal other than closing costs, of course, and be 100% financed.
Would you call it sort of like a deposit?
If you want to get more technical, it's probably just repair escrow funds. You know, if that's going to be more common in the industry, you can say, hey, you put up your 7,000 in escrow for repairs, and then we're going to give you your 7 grand halfway and halfway, and your other half at the end of the rehab. But that is also along with our fund. So that in that example, it would be 20,000 from us in rehab, ready immediately for a draw when they do work. They would need to bring in their 7,000 plus the points, plus the closing costs, plus whatever title company charge, which is closing costs as well. But I'm talking about like insurance costs and everything involved. But they're going to get, let's just call it 14,000 total to cash to close on the HUD. They're going to get 7,000 of that 14,000 back in their pocket through the repair process when I refund them half, 3,500 halfway through and 3,500 at the end of the rehab.
So the points are paid at closing, or is that rolled into the loan?
Yeah, so we do collect our points up front, and again, total transparency. Just if they default, we don't run credit or anything, right? And we're taking more of a risk than some of the other lenders by requiring basically nothing. So we do want our points up front, because if we do have a default situation, they're not going to give us any points when we have to take their house back, right? Mm-hmm. And our default rate is actually less than 1%, believe it or not. So our goal is not to take houses. We don't want to be a loan to own company. We just want to be a bank for people and create relationships.